SDS, ProShares UltraShort S&P 500. This has been setting up a bottom base. When the S&P corrected from 1475 down, these bear funds were at their all-time lows and were deeply oversold. We haven't looked at them for a while, but once again, I will put right here in the video, here's the SDS, and here's a list of great bear funds. There are some that we do and some that we don't. We like this volume one on here. It's an ETF. However, when the S&P 500 is selling down, as it has been doing, you can see right here it kind of closed up on the day, but we're testing that 200-day simple moving average at resistance. Now, it being Thanksgiving, it being Congress, it being the new re-elect again, Obama, and all of the fiscal cliffs and everything that we are facing, is that it's a place to buy these on pullbacks. If everything doesn't go right, this is a way for people to participate when markets are selling off. It's not against the law for you to make money when everything fails. And I will also be happy, just once again, I will show a daily chart with the S&P 500 here. So I'll pull up a daily and I'll put the S&P 500 chart right here. Here is an S&P 500 chart where it sold off. This is the bottom right now currently on the S&P 500, meaning that it's had a fairly decent correction from its all-time highs up here in calendar 2012. And as the S&P broke below its 200 simple day moving average to test these lower ends at the S&P, remember it was right here when the S&P had the big rally in 2012. What I can say is that when you look at both charts here, you can clearly see right here that the bear SDS S&P 500, it's broke out. When it pulls back, if this sells down, then this S&P 500 will go higher. It's technically oversold in the short term, and this is technically overbought in the near term as well. So when we rally up here, we would pull back to test moving averages down here at around 58. It's a great place to be diversified for risk management, meaning that if these markets want to crater and we're going to go off the fiscal cliff of 2013, this is going to be a place to buy the dips on using the SDS UltraShort S&P 500. If we continue to break lower to support right around my 1320 area, let's say, then that's another 30 handles lower. Then that means that the bear would continue to go higher. Now, in our trade management with our new SMF students who are just now being introduced to it, and the public, you need to understand one thing. It's a great place to make money buying these bear funds when things are not going in the bull way. Meaning that if Congress fails, these bear funds, a lot of these bear funds are going to make higher moves. That's where the money would be printing, and that's where you need to be. Now, what we will take a look at in the shorter term, we looked at the VIX, the fear indicator. We got the bear fund that goes with that VIX. Then we have the correction in the S&P 500 index. The correlation is when I break down here, you can see that that breaks higher here. It's going to be an ongoing calendar year-end trade, but most importantly, throughout the full year of 2013 with slower growth, economic collapses are happening around the world. We are going to be monitoring how these would pull back and set up bases. They all make their runs. It's had a great run from 52 to 60. It was an $8 move. So if you had 1,000 shares, you made $8,000 while the markets were selling off. Or if you had 5,000 or 500 shares, it wouldn't matter. When the markets are selling, you're getting paid over here. And you can also have various other instruments. They all tie in together, and it's very high degree level of risk management portfolio for those who want to sign up for that. And then just for the regular day trader that's out there, we're market makers, so we're making markets all the time. What I can say is we got the wall of resistance on the SDS bear fund, and we have the major support level of the original correction in the S&P 500 index. We're going to see what happens on Monday, Tuesday, and Wednesday, and how this works throughout the rest of the calendar year.